Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Apologies for the husky voice, perhaps I'm coming up with something, but hopefully not something serious. But let's begin by looking at the European market reaction. First of all, we have the French GDP number. What a dismal number it was, because the French GDP plunged by minus 5.8%. Folks, the expectations for the French GDP to plunge was minus 4%. Now obviously the number was a lot more darker, a lot more harder plunge than what the expectations were. But despite the fact, we are not seeing that much of a weakness when it comes to the European markets. As you can see in the chart, the CAC 40 index is still holding on to its gain. The low which was formed for on the March 23rd, known as the COVID-19 low, is still very much in place. The momentum is still skewed to the upside and the markets are still moving higher and higher. Now the situation is very similar for all other European indices today as well, whether we are speaking of Stock 600, whether we're speaking of IBEX, the FTSE MIB. In fact, when we talk about FTSE MIB, the price action is really intriguing today. Why? Because remember, the European Central Bank is going to be under the spotlight. It will be announcing its monetary policy decision at 12:30 UK time. Now remember folks, the ECB, the European Central Bank, has talked about jumping into high yield bonds market, right? Basically buying junk bonds, nothing more than that. But the Fed has already done that, so now the ECB wants to do it. Why it is important? Because Italy has been hit the most with the coronavirus impact, right? So, and we already know that Fitch has already downgraded its sovereign debt rating by another notch. It is sitting just one notch higher than classified as a junk rating, right? So what is happening over here? The ECB triggered its PEP program, the PEPP program, under which it purchased over 70 million worth of assets. But despite that, the credit default swaps continue, the cost for insurance for these ones, they continue to surge. Now, obviously the ECB has no other choice but to initiate this high yield asset purchase program, under which it will buy these junk rated bonds from these governments and in order to provide them liquidity, in a hope that this will restore some sort of a normality, some sort of a growth within the Eurozone. Now speaking of growth, the GDP figure which came out over in the US yesterday, they were pretty weak as well. A huge plunge. In fact, the first quarter plunge for the US GDP was the largest since the financial crisis, i.e. 2008. But investors are once again giving a free pass to these numbers. And the timing of that was very, very important, because yesterday at 1:30 p.m. UK time, the US GDP data came out, and at the same time, we also had the news from Gilead Sciences saying that okay, some of his treatment for a coronavirus patient is becoming effective. Now obviously that is a much bigger news for traders and investors, and they paid more attention to this positive aspect of this news coming out from Gilead Sciences rather than paying attention to GDP numbers. Remember, these GDP numbers were expected to drop, were expected to plunge to this extent anyway. So investors completely ignored the GDP data and focused more on this drug, which can be helpful to treat patients who are infected with coronavirus. And that is really fueling the market. This is why, as you can see in the chart, the Dow Jones index closed on a stronger foot yesterday, and today the US futures for the Dow Jones index are again trading to the upside. Now speaking of gold, remember that there was one particular element which stood out the most from the Federal Reserve meeting yesterday, which was that the Fed is in no rush to increase its interest rate anytime soon. So it is expected for the interest rate to remain near zero for an extended period of time that can last for a number of years, at least for a couple of years. So what does that mean for gold? Obviously that is very positive for gold, because as long as that loose monetary policy remain in place, and that is what we have learned during the financial crisis when the Fed started its asset purchase program, the path of least resistance is skewed to the upside when it comes to gold price. But remember, you can always protect your upside and downside positions by using AvaProtect. That's all for today. See you guys tomorrow.